Hope you are having a smooth year end. After working with more than a dozen of finance team across industries, I have observed that one of the standard that our finance teams struggle with is IFRS 15. Now, today we are here to talk about the standard of IFRS 15. The core principle of IFRS 15 is that all revenue recognition done by an entity should reflect consideration which an entity expects against transfer of promised goods or services. Now, to record revenue under IFRS 15, standard lays down five step approach. The five steps under standard are: number one, step one, identify contract with customer. Step two, identify performance obligation. Step 3, determine transaction price. Step 4, allocate transaction price to performance obligation. And step 5 is recognize revenue as and when each performance obligation is satisfied. Now, let's dive into all these five steps to understand it better. Now, all the steps that I have mentioned above are important for recognition of revenue, because that is how the standard defines the steps. The standard defines how the revenue recognition should flow under IFRS 15. Now, to talk about step one, which is identify contract with customer. Now, this is one of the important step, because if there is no contract in place, the standard does not require a revenue recognition to be taken into the standard does not require revenue recognition to be considered, and that's where this step plays an important role. Now, the step of identify contract with customer also lays down five criteria for identification of contract with customer under IFRS 15. Now, once all these criteria are met, the revenue recognition, the step says that there is a contract with customer, and your revenue recognition would basically start from this step one. Now, one of the client in our Middle East that we have come across has entered, just to take an example, actually under step one of the client that our Middle East we have come across, we noticed that there was a contract which was entered with the customer. However, the right to collect was established. The contract mentioned that right to collect was established only after the SOs, which is sales order, are entered, which will be subsequent to the main contract. Now, the question arises as to whether there is a contract with customer under IFRS 50 when the main contract is entered. No, it is not, because one of the criteria to identify the contract with customer was not established, which is collectibility, and hence the collectibility was established post the SOs were issued. Thus, this step does not focus on the form of the contract. Rather, the assessment under this step focuses on enforceability of right and obligation. And the enforceability of right and obligation was established under this step only after subsequent SOs were issued. And hence, this assessment was important. Now, we are through with step one, which is identifying contract with customer, and once we are okay that the contract is in place, the second and the important step is to identify performance obligation. Now, this is an important step because based on the performance obligation, the subsequent accounting of revenue will happen. Now, once how do we identify performance obligation under IFRS 15? Now, performance obligation can only be, so this requires the contract to be dissected further into the services that is being offered under the contract. Now, are these services distinct in nature? The standard require under this step, you need to identify, are these services distinct in the contract, and are they distinct in the context of the contract? Now, once both these criteria are met, one can say that the performance obligation is established, and whether there are multiple performance obligation or single performance obligation will actually impact your other steps, which will take subsequently. Now, step 3 requires, which is determine transaction price, which is established through the contract that is in place, which mentions, so this step has a variable factor. If there is variability in the contract, that needs to be assessed. Now, once the step 3 of determining transaction price is completed, we move on to step 4, which is allocation of transaction price. Now, this transaction price needs to be allocated basis the step 3 transaction price that we have evaluated, and that allocation should happen to the performance obligation that has been identified under step 2. Once this step of allocation is fulfilled, we move on to the step 5, which is recognize revenue as and when services are performed. Now, again, under this step, we meet with there are certain criteria that is already assigned, basis which we say that whether the revenue recognition is done over time or revenue recognition should happen point in time. Now, you see, all these steps are interrelated and requires a lot of judgment, a lot of interpretation, and a lot of thorough knowledge of the standard, a detailed understanding of the standard. Now, if misinterpreted, it can not only cause non-compliance, but a major harm in reputation. Now, we have seen all that what happened with Byju's. Now, in Byju, revenue from streaming service, which was recognized fully on commencement, was subsequently identified by auditor to be recognized over time. Now, if you relate to the steps that I have mentioned before, this is actually talking about step 5, where you need to identify and recognize revenue as and when the services are performed. And recognize revenue as and when services are performed identifies two approaches, which is point in time and recognize revenue over a period of time. And that's where the Byju's made an error to identify they recognize revenue fully on commencement rather than spreading it point in time when the services met the criteria of overtime. Now, apart from this, there are multiple other factors under variable consideration. There are multiple other factors like variable consideration, significant financing component, gross versus net assessment, reimbursement of expenses, which also plays a crucial role in driving the revenue accounting for the company and decoding its business impact. Now, if you are facing difficulties in decoding IFRS standard or Ind AS standard and need help with the same, please feel free to speak to me or our strategic consultant, who would be happy to design a customized roadmap for your organization. We also break down multiple technical accounting topics or concepts over our YouTube channel. You can find the link to subscribe for the same in the chat box below. Until next time, keep learning, keep growing. Thank you.